Hello, everybody. Dan Lucas from Credo here, and welcome to the 50 States in 50 Days series. Today we are on day number 27, and we're talking about the state of Florida. And Florida was admitted to the Union on March 3rd, 1845. And Florida is pretty unique in the whole scheme of things of the 50 states, in that it has no state income tax. And in fact, that's why a lot of people flood there, is to conserve wealth, protect wealth, and avoid any of that nasty kind of state income tax. And it's also beautiful there, so it's kind of a haven of beautiful weather, beautiful scenery, and beautiful lack of need to pay any income tax. However, they have to pay for things somehow, and so Florida uses a lot of. They use sales tax, they use corporate income tax, they use fuel tax, they use especially property tax. Property. I mean, if you think about the dollar value of property in Florida, you're talking about a huge tax base, obviously. Okay, so I wouldn't say that the taxes are necessarily astronomically high. Like, I know that when I've had some property in Florida, I don't have any now, but when I have had it, it wasn't necessarily a larger percentage than what I pay in Georgia. But the values are higher, right? So you're paying the same percentage on a higher value, which means mathematically, of course, you're going to pay higher tax there than here, just for kind of same house to same house comparison. But anyway, Florida has a lot of incentives in a lot of different areas. And when I'm looking at this, I want to just kind of read down the different types of credits, because just based on the titles, you can get a good idea of what the credit is, and then kind of let you know what kind of tax it can be used against. And so what I want to do is I want to kind of read down that list, and then I might come back to a couple to make more commentary on it. But again, I'm trying to keep these videos to 10 minutes. I've failed miserably in a lot of them and gone over, but I have done my best to make this as an efficient use of your time as possible. So in order to do that, I need to start talking about tax credits, right? Okay, so the first type of credit incentive that they have in Florida really revolves around energy. And probably no surprise to anybody is that it's a great, Florida is a great source of solar, right? And they want to keep it beautiful there, right? So trying to have healthy air, trying to use the sun that they have as a huge asset that they can capture down in Florida is no surprise to anybody. So let's talk about some of these energy credits. First one we have is the exemption for boiler fuels used for certain industrial manufacturing processes. Then we have the exemption for electricity or steam used to operate machinery or equipment used in certain manufacturing industries. We have the exemption for electricity used for agricultural purposes. We have the exemption for natural gas used to generate electricity in a non-combustion fuel cell used in stationary equipment. We have a renewable energy production tax credit. We have a solar energy systems exemption. Now, all of these credits I just mentioned are to be used against sales and use tax. Okay, that's the kind of tax you can use them against. The one that's the renewable energy production tax credit can be used against corporate income tax, right? So if you have a corporate income tax, is different than your personal tax, obviously, and is even different than what you would have as far as like pass-through income. So if you have a pass-through entity that's based in Florida, that income passes through to you, of course, but that's not the kind of tax we're talking about. We're talking about the actual tax on the actual business, whether it be a C Corp or any other company. Okay, so of all those credits, again, you use them against sales and use tax, except for the renewable energy production tax credit, which you would use against the corporate income tax. Okay, the next category of tax incentives is around film and production. We've talked about film and production tax credits a lot in some of the other states. And you have, if you film in Florida, which is a beautiful place to film, obviously, you get an exemption. So you get an exemption from all sales and use tax if you're filming in Florida. So that's really, really nice. It's a really nice incentive, especially in a place where, you can do a lot of great filming. I mean, you can film in Florida and say that the beach is anywhere, right? So, and just great scenery in general. If you're in the service industry and you want people to see how they could live their life on a beach, it's a great place to film. So a lot of people film commercials there, et cetera, et cetera. And even if you go down there from another state, you're going to be subject to that sales and use tax if you go down there and film. So know that you don't have to be a Florida resident to benefit from these things. You just have to be doing some business in Florida or some activity in Florida, and make sure that you capture these credits, because a lot of these credits, again, go by the wayside and people just don't know about them, okay? And it's just free money just sitting there waiting for you to take it. Okay. There is the next category would be for insurers and HMOs. And there's only two of them. One of them is the Florida Health Maintenance Organization Consumer Assistance Assessment Credit, and the other one is the Florida Life and Health Guarantee Association. Now, the first one, the Health Maintenance Organization Consumer Assistance Assessment Credit, can be used against corporate income tax and corporate income tax only. The next one, which is the Florida Life and Health Guarantee Association, can be used against corporate income tax or the insurance premium tax, right? Because there's a tax on insurance premiums in the state of Florida, so you can get an exemption from that. Anybody in the insurance industry that's in Florida will know this. Okay, the next category is investing in Florida. Okay, it just simply says investment in Florida. And there are several credits here. I'm going to list the first, gosh, they're all over the place. We've got the capital investment tax credit, and that can be used against corporate income tax or insurance premium tax. We have the community contribution tax credit, and that can be used against corporate income tax, sales tax, or insurance premium tax. We have the contaminated site rehabilitation tax credit, which can be used against corporate income tax. We have the entertainment industry tax credit, which can be used against corporate income tax. We have flight training schools, which can be used against fuel tax. So I'm assuming that that's if you have a flight training school that, obviously there's a fuel tax on jet fuel or, the fuel that's used in that type of, business, and you get an exemption for that. So that's pretty cool. There's a Florida neighborhood revitalization tax refund, which is something you can use against sales and use tax. There is a hazardous waste facility tax credit, which you can use against corporate income tax. There's a new markets tax credit, which can be used against corporate income tax or the insurance premium tax. Why is it against the insurance premium tax? I'm not really sure, but it says you can use it against it. Probably because there's insurance involved in the activity that generates that credit. Now they have their research and development credit, which we've talked about a lot for both federal and state. If you're in the state of Florida, don't ignore the state benefits on this and just get the federal, okay? Just because you don't pay state income tax. In Florida, you can get a corporate income tax credit or a sales and use tax credit. And remember, in Florida, you're going to pay a lot of sales tax, okay, over the course of a year. So if you get a huge credit, you might get a whole year of free sales tax, okay, if you're in business there. So that's huge. There's a rural area of opportunity tax refund, and that can be used against the sales and use tax as well. They have the state housing tax credit, and that can be used against corporate income tax. They have the subtraction for Florida employees included in calculation of federal employment credits. That can be used against corporate income tax. Here's a big one that can go across lots of different taxes in Florida. Tax credits for contributions to nonprofit scholarship funding organizations. That can be used against corporate income tax, sales tax, the insurance premium tax, and severance tax. So you pay severance to people in Florida, they tax you on it, okay? All right, so that's the investment in Florida section. Let's go to the job section. All right, in the job section, there's 3 credits. There's the rural job tax credit, the salary tax credit, and the urban high crime area job tax credit. Now, the rural job tax credit can be used against corporate income tax or the sales and use tax. The salary tax credit can be used against the insurance premium credit, where I'm assuming that has to do with unemployment insurance, maybe some workers' comp insurance. But in any case, it looks like some payroll credits you can get on that one for the salary tax credit. The last one of the jobs is the urban high crime area job tax credit. That can be used against corporate income tax credit and sales tax. Okay. Now, the last section is on machinery and equipment. So, All of these machine or equipment are to be used against sales taxes. Okay, all of them in sales tax only. We have the exemption for certain repair and labor charges. We have the exemption for industrial machinery and equipment. We have the exemption for industrial machinery and equipment used by a new or expanding business to increase productive output. We have the exemption for industrial machinery and equipment used by metals recyclers. And we have the exemption for machinery and equipment and other materials used for pollution control. All of those can be used against sales tax credit. Okay, so that's all the credits in Florida. Now, I'm not going to go back and talk about each one individually because I think there's maybe more benefit in just talking about this in general. But if you're in Florida and if you're in business, if you think of a way to save money on energy, or if you're going to put some renewable energy or invest in some renewable energy, check the credits. You're going to get credits on your sales tax. Okay, so check that. If you have to rehabilitate or fix any of the environmental issues around you, if you happen to own real estate, or if it happens to be affecting you in a certain way, you need to make sure you're getting the tax credits for that. Okay, so anything that has to do with the environment, eco-friendly, green, initiatives, anything like that, Florida is really good about giving you good incentives on that. If you're in the film and production industry, or in the movie production industry, or in entertainment industry, there are good tax credits here. If you're not getting them and you're doing anything in Florida, you're missing some money, okay? If you are in if you're in the insurance business, or if insurance touches your business a lot, or to keep part of it, you need to be looking at tax credits because they have a lot of nice benefits on that insurance premium credit. If you are investing in Florida real estate, you need to be looking for these credits, okay, because they have a lot of credits on Florida real estate. That should be no surprise to anybody. Again, R&D credits. Make sure you're getting the credits on the state level if you're getting them on the federal level. If you're not getting them on either level, make sure you're getting them on the federal level, at least to start with. If you're hiring people, if you're giving severance, benefits, that kind of thing in the workplace, you need to be looking at the credits in Florida because they have some generous credits there. Again, remember, sales tax is not a small tax. It's a huge tax, okay? So, a lot of people I would think would pay more in sales tax than you would even pay in corporate income tax, okay? So don't ignore these nice benefits on the sales tax, especially if you're a pass-through entity, because all that money ends up in your pocket anyway. So it's almost the same. It's the same difference. It goes into the same pool as if you were getting tax credits on your income tax. If you have machinery and equipment, they are really good about protecting the blue-collar workers, the hands-on workers. They have a lot of technical schools in Florida, so they have a big need for a lot of these workers. If you're in this business, if you have machinery and equipment, you're probably missing credits if you're not already getting credits on your sales taxes. Okay, so you definitely want to be looking into that type of thing. Anything you're doing for pollution control to make the environment better, you're probably missing some credits, so you need to be looking these up. Okay, so that was kind of a mouthful for a state that has no income tax, state income tax. But again, Florida is a very considered, it's a surplus state. They have a lot of pretty wealthy state with a nice war chest. Their property taxes pay for a lot of things in the state. Sales tax pays for a lot of things. There's a lot of consumption, a lot of people coming in the state from out of town, etc. So sales tax and property tax, huge revenue producers for Florida. Okay, and if you're in these areas doing business and you're not getting a tax credit, and something maybe I had said it kind of bent your ear a little bit, you're probably missing one, and not paying sales tax and putting it right in your pocket, or that insurance premium credit, or even that pesky corporate income tax, hey, money's money. Put it back in your pocket. All right, that's it for this one. I appreciate it. And on the next video, we are going to be talking about yet another state income tax-free state, the state of Texas. And I will see you then.